shares already. Devina Mehra is now joining us, founder, chairperson and managing director at First Global. She's the market master of the day. Devina, great to have you with us on the program as always. At a broader level, Devina, briefly, if you could sort of run us through your thoughts. Are you constructive that the market does well? Very soon, if you were to look at the silver lining, very soon, earnings growth has been poor, we all know that. But very soon, you're going to sort of flip over and start to look at FY27 estimates. And that maybe provides us some leeway, some flexibility to maneuver. But what's your sense, Devina?
Good morning, Prashant. My view, I was looking at my February interviews. I had said at that time that if you were waiting for a correction to invest, have you invested? And we know that markets, depending on which index, are up 15 to 20% since then. But even now, I would say that whatever is your equity allocation, remain invested. I mean, markets could be choppy for a while. There could even be some downside from here. But in the medium term, I remain positive. You mentioned earnings. Yes, Q1 earnings have not so far been particularly great, and that was to be expected. I think you'll see improvements in the coming quarters because there have been some positive macro developments. We, of course, know that the GDP came out ahead of expectations. But besides that, the one big positive has been inflation. So inflation, especially food inflation and crude. These two things are important for India and important for the corporate sector also because they impact consumption. And there has been over the last 1 year good news on both. I even saw, some newspaper which does an estimate of the household thali, and not just the inflation. Actually, the price has come down, which rarely happens. And as we know that when inflation is high, because India is still largely a fairly poor country, it crowds out other kind of consumption. If dal prices are too high, people don't buy shampoo. It is as dire as that. So now you're seeing the other side. So this is the good thing on the revenue side, and also on the margin side, you will see some improvements, especially since crude and downstream are a big portion of inputs for many industries. So I think you will see improvements on both those fronts in the coming quarters. You may not have to wait till FY27 for that.
Devina, if someone came to you and with a meaningful amount of money and said, well, I want to put this to work, right? Would you tell them to sip it into the market slowly through funds, etc.? Would you say this is this is as good a time as any to sort of take slightly chunkier, deploy in a more chunkier fashion? Just that specific question, Devina. What's your sense?
You could deploy it probably over a few months, maybe 3 to 4 months. You can split what you want to invest. So that it's something that you can do rather than deploy it all at once. But I think definitely you should, whatever is your equity allocation, again, I'm repeating, never have 100% in equity because equity predictability is always low, not just on a 1 year basis, but sometimes even on a 5 year basis. So whatever money you deploy in equity, you should not have to touch for at least 8 to 10 years. So give that caveat. And then whatever is your equity allocation, yes, if you are not invested fully, you can do it over 3-4 months.
Prashant, when you asked Devina about you have a pot of money which you want to deploy, at least she said deployed in India staggered. I thought she'll say deployed in other global markets because Devina, as we all know, is a big sort of votary in favor of diversification, global markets, global assets as well, and not being squarely focused very narrow on India. On that, Devina, it's easy to get negative, but really help us find the right lens through which we need to look at the Indian market right now. Look at reactions today. Numbers weren't too bad, but the market is drifting in. It's just expectations are still continuing for solid growth, 15% plus growth, and very, very few companies are able to deliver that. So is this a temporary patch? Do you think we should just keep investing in this patch? Or is it a bigger concern?
So, Surabhi, coming to what you said at the beginning, your question. Yes, I mean, global diversification you must do. I mean, that is something, one area where Indians are normally lacking. So over a period of time, at least 30 to 40% of your uh, uh, investment should be in global markets. And I see now other fund managers picking up sort of my arguments here and there. And suddenly in the last 1 year, I see fund managers now saying that I'm investing personally globally, whereas their last year's portfolios didn't show any global exposure. But that apart, I mean, it is a good thing to have global exposure. And but coming to what you said, yes, I mean, as I said, the markets could be choppy for a while. There could be some downside, but in the medium term, I still remain positive, which is why I'm saying that you must invest to the extent of your equity allocation. And this is a data point I have repeated often, that when there is no imminent, very overwhelming evidence that a crash is coming, most of the time it remains, it makes sense to remain invested, because in 40 years you miss out the 10 best days, you miss out 2/3 of the return. And normally, those good days come only when there are these questions in the market that should I be invested, shouldn't I be invested, should I, is the time to go out, should I stop my SIP? That's when the good days come. They don't come in a mad bull market. So in 2024, everybody was convinced that they could make 30-35% compounded forever. I had family officers tell me that, let alone small investors. And even saying that I don't want too much, 30% is great. Still, like 30% is too much. So at that time, people were not asking me that should I stop my SIP. So the questions always come when there is uncertainty, and often that is the time when the market actually gives sharp moves.
All right. Hi, Devina. Good morning. Good to see you, Ben. Markets are drifting lower actually as we speak, but you were talking about some pot of money or gold or something. Wow, that really, brightened up the morning. That said, just to clear the point, a lot of retail audience will be looking in there. What would your advice be in terms of equity allocation if you're allocating fresh money today? What would it be? And I think the point that you made on within equity, 30% should be allocated in global equities, if I got that correct, just to reconfirm.
Yeah, actually, of your total investment, 30% should be overseas. So even non-equity investment, there is no reason why it should be 100% in India. So that remains. So I mean, when you're talking of equity allocation, the first part of your question, you're talking the sectors?
No, total overall equity allocation. And then we could get to sectors, so that will be the next part. But first, what would your advice be?
Yes, I just said that if you, I think you should be invested. If you want to stagger it, you can stagger it over 3 to 4 months of whatever is your equity allocation. That is still not invested in the market.
Fair enough. By the way, Devina, so many other things, and in the US, for example, right? I mean, big tech is doing well, and all these policies are aimed at the AI-related policies and the R&D expenses, where big tech is one of the largest spenders. Firing on all cylinders. Nvidia, so that's that entire pack doing phenomenally well. The other part of the market, I don't know if you have any thoughts here, Devina, is crypto. I'm just asking you this. I mean, the stance of the regulator, the government here over the last couple of years has been absolutely clear. But here you have the president of the US, the White House, trying to mainstream crypto. And let me tell you, by the way, they've signed the first bill into law. And I was just looking at Coinbase. Coinbase is up 3x since the lows in April. I don't know. You think this will force a relook at this as an asset class around the world? I mean, many countries share the skepticism that we do here in India.
Okay, so first of all, let me just, I've been talking global investment. So global does not mean US only. It does not mean the 7 stocks you know the names of in the US and the 3 stocks you know the names of in China. Global means truly global because the themes change. So the same themes, the same countries, the same assets don't do well forever. So this is an important caveat. Very often, people in India talk about only this because that's the only thing they know of or kind of understand. So I'm not saying that put all your money in US or US tech for that matter. Currently, in our global funds, we are underweight US, just to let you know. Of course, it's still the largest equity holding, but we are underweight. And as far as crypto is concerned, I mean, my position, I had written a series, I think, back in 21, saying that I do not say that this is not a legitimate asset class or will never become a legitimate asset class. But remember, this is a highly volatile asset class. Even in its limited history, there have been many times when it has been down 70 to 85%. And of course, after that, again, you saw that kind of volatility. So if it is a part of your asset allocation, it should be a very small part. In a global fund, I think maximum we've ever had, not directly holding Bitcoin or something, but crypto-related assets has been maybe 3%. So it can provide some non-correlated gains, but it's a highly, highly volatile asset. So it should not be like 25, 30% of your allocation or anything like that. Yeah, what President Trump is doing is a bit strange because crypto actually undermines government fiat currency. So as the head of the government, should you be doing that? Should you be saying that don't use my currency and use crypto? I mean, just look at that if it actually catches on, it will replace the US dollar in international trade. Is that something he wants? Because all along, for every other currency, he is saying that I don't, if you start doing trade in some other currency, that's a negative and you will be penalized for it. So it's not very consistent, at the very least.
Well, we live in a complex world, and I think one clear takeaway is, as Devina, you always maintain, that don't put all your eggs in one basket. Make sure you're well spread out. And I think that's a great piece of advice that our viewers can take back with them. Thank you so much for joining us this morning. Good to have you on, and we look forward to more conversations soon. Thanks for being with us.
Thank you.